James, what is your enthusiasm to acquire shares with a 3- and 5-year perspective?
I remain undiminished in bullishness for the near term. I anticipate that the S&P 500 will get to 3,800 points somewhere within the next 12-month period. But I'm not that optimistic in terms of the corporate earnings that underpin that progress. So I am looking for about $125 for the current year, whereas the street is after 131. I'm expecting no more than 155 next year. The street's on 165, which would take them back to the end 2019 levels. For 2022, I'm looking for $180, whereas the street looks for 190. And this is even before we put in the possible risk of Mr. Biden sweeping the presidency and Congress and applying a tax hike to corporations that might deduct $10 from those numbers. My rationale for backing equities right now is the risk premium, the forward-looking return for being in equities against other asset classes remains elevated. It's very high against cash and bonds, self-evidently, and I would say that equities are 2 standard deviations cheap relative to gold.
OK, there's a couple of things. In fact, there's about 3 or 4 we need to get through here, James. You are the first guest, and welcome, the first guest in the last several weeks who has talked about a blue wave and then used the word risk afterwards and then talked about tax hikes as well. James, do you think that's really underappreciated at the moment?
Yes, absolutely, I do. The consensus expectation is that Mr. Biden would be bullish for markets. Actually, I think that the most bullish would be some sort of gridlock in the U.S. political system where, for example, if Mr. Biden were president, the Senate remained Republican, because that would mean that the political agenda would be much more muted, and it could be left to companies to do what they do best, which is trying to achieve strong long-term shareholder returns.